Hey everybody, welcome back to today's Market Explained, the four-star media experience. We do market commentaries here regularly, and then periodically we have interviews with players in the financial system that we think investors should get to know. And today we have an interview with Jason Debono. And Jason, you're with us. You're the head of alternatives custody at Inspira, and you guys are headquartered, I believe, in Oak Brook, Illinois, right?
Yeah, we're a Illinois-based company headquartered out of Oak Brook with employees and things really all over the United States.
Well, welcome to the podcast. We talk about a lot of investing subjects, usually involves markets and things like that, and how do you invest. But we're talking to you, and you lead the custody division of this group. And I wonder, I mean, it's alternative investing custody, so a lot of people don't know what alternatives are. But let's talk about alternatives and why do we need an alternatives custodian? Let's talk about all those subjects.
And I think it starts with the custody of accounts is something that exists everywhere, right? There's plenty of players that can provide the necessary custody and account and tax reporting to the appropriate parties. Where we get into the world of alternatives and kind of the niche that we serve is really we provide unique support specifically to alternative investments. So we can house public equities, we can house mutual funds, that sort of thing. But that's not really why you use someone like an Inspira. We're really here to support non-publicly traded investments. So those can be packaged up products like private placements, limited partnership deals, private company, bank stock, anything that's simply not publicly traded. And they can get all the way down into more esoteric items like one-off private loans, individual parcels of real estate. And so we have the ability, expertise, and wherewithal to provide custody really to every type of asset, not just publicly traded equities.
So I have an account at Fidelity or Schwab or Pershing. Don't they do this? Is this not an area that they traffic in?
Yeah, I think the short answer is they can. You may have an attorney that deals with a variety of things, right? Yet if you were doing a unique real estate transaction, you'd probably go get a real estate attorney. If you were going to do something that was going through immigration, divorce, whatever it may be, right? You'd go find a specialized type of attorney for those. And that's really the difference between us and someone like a Fidelity is that they're a lot more general practitioners. They're capable of doing all things public and a little bit alternative, whereas we're capable of doing all things alternative, but we can also provide some support to the public side as well. So Fidelity may be willing to hold an alternative investment for you. They may not, depends on the asset and the asset class. And there's probably a process to go through, and there's probably pretty exorbitant fees to get to the finish line. And what we do is we provide the same level of support with what we believe to be a much more value-centric opportunity, a lot easier access, and then hopefully a more simplistic solution.
Great. So folks can put like their own home in there as well, or does it have to be investment real estate?
So no matter what you do in a retirement account, it always has to be for investment purposes only. The IRS says you can do that with your personal money, but under the auspice of a tax-advantaged account that's set up for retirement, you can't live in or use the property if you buy real estate. You can't invest and buy your own company, right, and try to put the profits into a tax-free or tax-deferred environment. So there's some boundaries, but as a general rule, as long as you're buying it passively, strictly for investment purposes, you can buy it within the retirement account and maintain all the same tax benefits inside that retirement account, which is an incredibly tax efficient way to maximize investment return.
So you must see a lot of interesting things if you're dealing with private businesses and other things. Give us some insight. What kind of things do you see people put in alternative investing accounts or alternative IRAs, for example?
Man, I've been doing this 20 years, and just when you think you've seen it all, you start to see something in a couple categories. I've seen racehorses. That was a pretty cool deal. It was a group that bought really good bloodlines, hired a trainer to get them up and running, and then sold them as racehorses. That was kind of a cool endeavor that we've seen people invest into. There is a form of seafood, farm raised off the coast of California. There's some farm raised aquatic type foods, right? Clams and oysters, that sort of thing. I don't quote me on exactly what it is, but there's a pretty big operation, has investors that have invested into that, which again, seemed like a pretty interesting thing. We've seen people buy sports tickets, through a broker and have a broker resell them because the value of the future value of the tickets is higher than the present day value. So we've seen lots of things. Again, it's always important to understand each investment comes with unique understanding of both the tax code and any sort of implications that arise from that. You have to make sure you maintain an arm's length investment. So you can't buy the Lakers tickets and then go to the games, right? You've got to have a third party that sells them, and you've got to track everything. And if there's applicable tax, you got to be prepared to pay that. But yeah, we've seen some pretty interesting stuff. I think, Brian, the thing that's most interesting to me, over the years is that if you drive down any city in, Main Street America, it really doesn't matter the city or the town. My guess is you won't go a mile without some sort of real estate development of some kind or business that doesn't have some form of investor coming from a retirement account somewhere through that deal. It could be an apartment complex, it could be land banking, it could be a community bank that has individual investors. It's very hard to get too far down the road in any town and not have some tie back to an investment that's structured and people are making through retirement accounts.
So these are real investments, right? You can't put your house in there, anything you use personally. So it's got to be investable assets. There's a lot of rules and regs on that. You can consult with your advisor. We have advisors at Four Star that do this all regularly. And there are some other alternative custodians. You guys are clearly one of the leaders in this. So we work closely with your firm and a lot of your people as well. When you think about it, Jason, more and more people are doing alternatives in IRAs, for example, they would hold with Inspira. And why would that be? Isn't the stock market enough? Stock and bond market enough? What's your view on that?
There's no shortage of individual investments, and you can look in, go onto any, public equity platform and type in a ticker symbol and, you'll never run out of stuff to understand. I think, and again, I started doing this 20 years ago and the world has changed a lot, right? I mean, I think you got a few different things that have played into it. Number one, people have seen real estate as an asset class forever historically. And I think, if you look at the endowment models of Harvard and, what's become a lot more mainstream in terms of how people approach their investments is there's this hard asset, right? Assets that people can buy and touch and feel, a little different than equities. And so whether that's for diversity or if it's because you believe in them more, if it's because you can touch it, right, it has more value. So we've seen a natural push over the last 20 years, but certainly longer. Then you start factoring in that information is at our fingertips, right? In the past, we didn't have access to everything like we do today. And so I had someone that said something to me once and he said, look, there's just no excuse to be ignorant today. Right. Like the internet can't fix people that are dumb, right? Stupidity and those things may not be curable, right? But ignorance just means you don't know. And there's really no excuse for that. So you have things like crypto and online marketplaces and investing where you can, log on at 2 a.m. and go and find 100 websites that can give you access to commercial real estate, private equity, new. And so it's a combination of both. I think just the natural trajectory of the market. I think it's natural change in landscape as access becomes more available. And I think the last piece is that really, and I think, Brian, you'll appreciate this comment, is that what we used to call alternatives 20 years ago were truly alternative, right? Like really hard to get your hands on. If you didn't know someone that was doing a deal, you probably couldn't find it. Today, yeah, I mean, we call it alternative, but ultimately it's about as accessible as a public equity is to a lot of people anyways. And, even crypto technically is an alternative and people use Inspira, to open a separate brokerage account to potentially do futures or trade Forex or, access the, and so again, I think we're calling it alternatives and we're lumping a lot into it, but I think it's simply education, information, and then access.
Yeah, well, it's interesting to hear your discussion about it. And we talk about this a lot at Four Star, where when we ask folks what percentage of companies are public in America, and it turns out it's only about 2%. And so what is all the other 98%? Well, these are all alternative investments. They're real estate. About half of it's real estate. And then the other half is other companies. And that's what a lot of investors invest in. And now, Jason, you heard President Trump make a comment yesterday, and they're in the process of changing some regulations to allow alternatives in the 401ks. So that'll change the industry. And a lot of those 401k custodians are not really ready to house alternatives. So that could, be a big boon for Inspira's business for sure. And some of the other alternative custodians. So I think the public is starting, as you say, to get access to these areas. And you guys have lots of experience with it. And I wanted to make sure everybody met Inspira.
Yeah, we're absolutely, our ear is always open for what's going on in Washington. And, I think access is a byproduct of regulation or deregulation or clearing up of regulations, right? And I think what Trump just recently at least started the motion on of adding alternatives to 401ks just furthers kind of the thought that people want more control over their investments, right? They want more understanding in a more practical way. And I think if you look at something that's easier to wrap your arms around a real estate deal than it is to understand why a particular stock is shooting through the roof. I think people feel they've got a slight advantage or a perceived advantage. And there's a lot of professionals like Four Star that are helping people gain access to these types of assets. And so it's really, I think it's a good it's got to be closely monitored. It's got to be done right. And it's not for the masses to just dive in. I mean, people need to make sure that they understand what they're doing, because just because it's an alternative doesn't mean it's a guarantee of return, right? There's still risk, and there's risk that may be higher or lower, but it's at least, I'm always been an advocate that it should be in the eyes of the account owner or the person whose money it is to determine what level of risk tolerance they're willing to.
Well, and it makes sense, Jason. I mean, if the stock market averages about 10% return over time, and the bond market maybe 3 or 4%, depending on what category, and cash is in the, kind of 1% at a bank and maybe 4% at an institution, but those rates seem to be going lower now. So those are returns you can get in the public markets. All the categories of alternatives offer better returns, whether it be real estate, different categories of real estate, private businesses, 15%, private equity is usually 20% or better. Everybody's seen the TV show Shark Tank, and it popularized angel investing. So angel investing and the categories have averaged north of 25% there. And this is broad-based over time. That's individual deals, obviously, it can succeed or not succeed, but that's why you have to diversify quite well. And Jason, one other program that we have that we use Inspira to be our custodian for is the diversified alternative funds that are offered by Four Star. And so you can be an alternative investor in many of these programs if you're accredited, but the minimums are so high that it's hard to get diversified properly. You don't buy 3 or 4 stocks in a portfolio, you buy 25 or 30. Well, you should do the same thing in alternatives. So if you don't have 5 or 10 million, like a billionaire, to invest in lots of alternatives, then maybe you can use a fund like that, right? So we created a feeder fund, and you guys have been gracious enough to be our custodian for that. So we appreciate that very much. And it gives the smaller investor a chance to get involved in these programs and democratize this previously arcane and very, very opaque area of alternative investing.
Yeah, I think that continues to underscore access, right? Because it was very limited, and having access to alternatives are diversification, but it's hard to diversify inside of alternatives because of some of the minimums. You've got to invest a lot more. There are programs available that allow people better access with better diversification, but still good quality exposure to alternatives, hopefully to drive yield and return higher.
Yeah, and you'll get better returns over time. And if your average portfolio averages maybe 7%, a year on average, and that's the plan you have in your financial plan, well, how do you get that number to 8 or 9 or 10 or 11% compounded? And a big way of doing that is alternatives. And so having a custodian like you guys that can hold those alternative investments is really a great tool. And then having a fund like we created is also a real positive for the investors.
Absolutely.
Well, Jason, any other final thoughts for our guests here today?
No, we appreciate the work that you guys do, and appreciate the opportunity to kind of share the story of alternatives and alt custody, and look forward to continued dialogue.
Well, thanks. Thanks, Jason, for being with us, and to all our listeners out there. So as you contemplate your asset allocation, as you build your financial plan, alternative investing is really an area that now is becoming more and more accessible. The returns generally over time historically have been better than the stock and bond market. And now with Inspira and other real professional custodians, we have an opportunity to hold those in an environment where you previously couldn't do that. So it's actually pretty exciting for the investing world. We wanted to share all that with everybody. So thanks everybody for listening. And if you're interested in alternative investing and you want to house those investments, obviously we can talk to our friends here at Inspira. And we'd love to talk to investors about alternative investing because we think it's really an essential part of a well-diversified financial plan. With that, I think we'll leave it there.
Thanks, Brad. Thanks for having me.
Thanks, everybody, for joining us. And we'll be back with another episode of Today's Market Explained very shortly. Over and out for today. Thanks a lot, everybody.